Marvell Technology is a prominent player in the semiconductor industry, specializing in the design and production of integrated circuits. Founded in 1995, the company has grown to become a key innovator in the field, consistently pushing the boundaries of what is possible with semiconductor technology. These chips are essential components found in a wide range of electronic devices, including smartphones, computers, and data centers. Without these critical components, the functionality and performance of modern electronics would be severely limited. As a key player in this critical industry, Marvell's performance is often seen as a bellwether for the broader tech sector. Investors and analysts closely monitor the company's stock performance and market movements. Its earnings reports are closely watched by investors and analysts alike, as they provide valuable insights into the health and trajectory of the semiconductor market. These reports can influence market sentiment and investment decisions. Marvell's product portfolio encompasses a diverse range of solutions catering to various segments within the electronics industry. From consumer electronics to enterprise solutions, Marvell's innovations touch nearly every aspect of modern technology. Its offerings include storage controllers, networking chips, and custom-designed semiconductors tailored to specific applications. These products are designed to meet the unique needs of different industries, ensuring optimal performance and efficiency. The company's expertise in data storage and networking has positioned it as a vital supplier for cloud computing giants and data center operators. This strategic positioning allows Marvell to play a crucial role in the infrastructure that powers the digital world. As the demand for data storage and processing power continues to surge, Marvell has been at the forefront of developing innovative solutions to address the evolving needs of its customers. The company's commitment to research and development ensures it remains a leader in the industry. The semiconductor industry is known for its cyclical nature, characterized by periods of boom and bust. These cycles can be influenced by various factors, including technological advancements and market demand. Factors such as global economic conditions, technological advancements, and supply chain dynamics can significantly impact the industry's performance. Companies must navigate these challenges to maintain their competitive edge. Marvell, like other semiconductor companies, is susceptible to these cyclical trends. Understanding these patterns is essential for stakeholders to make informed decisions. Therefore, understanding the company's performance within the context of the broader industry landscape is crucial for investors seeking to make informed decisions. This comprehensive view helps in assessing potential risks and opportunities. As a leading provider of essential components for various electronic devices, Marvell plays a critical role in the global technology ecosystem. Its innovations drive progress and enable new technological advancements. The company's financial performance and its ability to innovate and adapt to changing market demands are of paramount importance to its investors, customers, and the industry as a whole. Marvell's continued success will depend on its ability to stay ahead of the curve and meet the ever-evolving needs of the technology sector. Marvell Technology's recently announced fourth-quarter earnings sent shockwaves through the market, falling short of investor expectations and raising concerns about the company's future prospects. The earnings report, which was highly anticipated, failed to deliver the positive results that many had hoped for. The disappointing results, which revealed a significant earnings miss, prompted a wave of selling pressure on Marvell's stock, sending its share price tumbling in after-hours trading. This sharp decline has left many investors questioning the company's strategic direction. The company's struggles serve as a stark reminder of the challenges facing the semiconductor industry, which is grappling with a confluence of headwinds including slowing global economic growth, geopolitical uncertainties, and persistent supply chain disruptions. These factors have created a perfect storm, making it difficult for companies like Marvell to navigate. Investors had high hopes for Marvell, anticipating strong earnings driven by robust demand for its data center and networking chips. The optimism was fueled by the company's previous performance and its strategic investments in key growth areas. However, the company's results failed to meet these expectations, revealing a significant gap between anticipated and actual performance. This discrepancy has led to a reevaluation of Marvell's market position and future potential. The earnings miss caught many market participants off guard, as Marvell had previously been viewed as a relative bright spot within the semiconductor sector, demonstrating resilience in the face of industry-wide challenges. This unexpected turn of events has shaken investor confidence. The unexpected downturn in the company's fortunes has raised concerns among investors, who are now reassessing their growth projections for Marvell and the broader chip-making industry. This reassessment is crucial as it could influence future investment decisions. The disappointing earnings report has cast a shadow over Marvell's future, as investors grapple with the implications of the company's struggles. The broader market is also feeling the impact, as Marvell's performance is often seen as a bellwether for the semiconductor industry. The company's management attributed the earnings miss to a combination of factors, including weaker than expected demand from certain customer segments, inventory adjustments, and ongoing supply chain constraints. These explanations, however, have done little to assuage investor concerns. These headwinds, coupled with the uncertain macroeconomic environment, have tempered investor optimism regarding Marvell's near-term growth prospects. The market is now in a wait-and-see mode, looking for signs of recovery. The market's reaction to Marvell's earnings miss highlights the heightened sensitivity to any signs of weakness in the technology sector, which has been a key driver of market gains in recent years. This sensitivity underscores the fragile nature of investor sentiment. As investors digest the implications of Marvell's disappointing performance, they will be closely watching for any indications of whether this is an isolated incident or a harbinger of broader weakness within the semiconductor industry. The coming quarters will be critical in determining the company's trajectory. To fully grasp the extent of Marvell's recent earnings disappointment, it's crucial to delve into the specifics of what went wrong. Understanding these factors can provide a clearer picture of the challenges the company faces and the steps it needs to take to recover. The company's revenue for the fourth quarter fell short of analyst estimates, signaling a slowdown in demand for its products. This shortfall was unexpected and has raised concerns among investors and analysts alike. This slowdown can be attributed to several factors, including softening demand in key markets such as data centers and enterprise networking. These sectors have been particularly affected by broader economic uncertainties. As businesses tighten their IT budgets in response to economic uncertainty, demand for Marvell's high-performance chips has waned. This reduction in spending has had a direct impact on the company's sales figures. Adding to the revenue shortfall, Marvell's gross margins also contracted, indicating a squeeze on profitability. This margin compression is a significant concern for the company's financial health. This margin compression stems from a combination of rising input costs and the company's inability to fully pass on these increased expenses to customers. The cost pressures have been exacerbated by global supply chain disruptions. The global supply chain disruptions have led to higher prices for raw materials and components, impacting Marvell's production costs. These disruptions have created bottlenecks and delays in the manufacturing process. Simultaneously, competitive pressures within the semiconductor industry have limited Marvell's pricing power, hindering its ability to offset rising costs through price hikes. This competitive landscape has made it difficult for Marvell to maintain its market position. The earnings miss wasn't solely due to external factors. Internal missteps also played a role. These internal challenges have compounded the difficulties faced by the company. Marvell acknowledged that it had misjudged the timing of certain product transitions, leading to delays in bringing new offerings to market. These delays have been costly in terms of both time and potential revenue. These delays have hampered the company's ability to capitalize on emerging growth opportunities, further contributing to the earnings shortfall. Missing these opportunities has put Marvell at a disadvantage compared to its competitors. The confluence of external headwinds and internal challenges has created a perfect storm for Marvell, resulting in a significant earnings miss that has shaken investor confidence. The road to recovery will be challenging and requires strategic adjustments. The company's management must now navigate these challenges effectively to restore growth and profitability. This will involve making tough decisions and implementing effective strategies. Their ability to address these issues head-on will be critical in determining Marvell's future success. The coming months will be crucial as the company works to regain its footing and rebuild investor trust. Marvell Technology, once a beacon of innovation in the chipmaking industry, is now facing significant challenges. Recent earnings reports have highlighted a series of setbacks, casting a shadow over its future prospects. Investors are growing increasingly concerned, and the market's response has been less than optimistic. As we delve deeper, we'll uncover the factors contributing to Marvell's current struggles and what it means for the industry at large. In the wake of Marvell's earnings report, investors are grappling with uncertainty. The company's recent performance has raised numerous questions about its future trajectory. How will Marvell navigate these choppy waters, and what does this mean for the tech sector as a whole? As news of Marvell's disappointing earnings spread, Nasdaq futures took a significant hit. Investors are reacting swiftly, adjusting their portfolios, and bracing for potential volatility. The ripple effects of Marvell's performance are being felt across the market. The broader market, including the S&P 500, Nasdaq, and Dow Jones, is showing signs of strain due to the tech sector's volatility. These indices are closely watched as they provide a barometer for overall market health. How will they hold up under the pressure? Looking ahead, the long-term implications of Marvell's earnings report are becoming a focal point for analysts and investors alike. The future of AI chips and their role in the tech ecosystem is under scrutiny. What can we expect in the coming years, and how will Marvell position itself in this evolving landscape?